even just in the simple things of like a 401k versus a Roth 401k, they're not equal. You cannot go like 100,000 of a 401k is equal to 100,000 in a Roth.
Yeah. It's not the same. The Roth is more valuable.
100%. Yeah.
Within that example.
Yeah.
Because for the traditional 401k or IRA, you have to pay taxes, remember, when you make the withdrawal.
Mm-hmm.
So the 100,000 is not 100,000. Depending on your tax rate, it could be 70,000, be 80,000, but it's not 100.
Yeah.
Whereas 100,000 Roth is 100,000.
I've had a client who, and I've mentioned this probably on a previous podcast I have, where they came down to dividing of retirement accounts, and I'm just going to use, it was 100,000 in a traditional IRA and 100,000 in a Roth. And they viewed those as equal, even though the person who got to keep the Roth was a high income earner who was not eligible for a Roth, who could not contribute to a Roth, self-employed. So I guess he could have set up his own, but it would have taken him multiple years. And the amount was higher. I think it was like around 300,000.
Basically, it was to his advantage.
Yeah, it was to his advantage. If you had just scheduled like a little bit of time with a professional, that answer would have been flushed out. And that had a huge ramification there. And it's too late now, you know.
Right. So your client ended up with less because they ended up with the, let's, in this example, $100,000 pre-tax amount, which will get taxed at some point and not be 100,000.
Yeah, they viewed it, both retirement accounts, as being this equal.
Right.
Yeah, correct.
So in terms of figuring out what to divide and what happens, it's important to note that transferring a spousal interest in a retirement plan. So we decided that the 401k is going to get divided, even though I'm working at Amazon and it's my Amazon 401k.
And you're still going to keep on working at Amazon.
And I'm going to keep working at Amazon, but part of the 401k is going to go to you, let's say.
Correct.
That is that has no tax ramifications to it. It'll just change names. Like they'll have to create a 401k for you. Correct.
Yeah, there's a way that you can kind of peel out, in Joe's example there, my segment of that 401k. And it can be, a non-taxable event there. But you do have a short period of time though as well. So there's all these little laws and timings, I guess, that you've got to be mindful of so that you don't screw it up. Yeah.
So there's a special, and I didn't know this when I got divorced. I learned this from being a CDFA. There's this special benefit, I guess, that's different if you're taking from an employer plan. So 401k, 403b, 457, the numbers, the numbers versus an IRA. So let's say we divided up a 401k and I needed money. The recipient of the other person's 401k can take money out one time or for a short period of time without that 10% tax penalty if you're underage or younger than 59 and a half.
Yeah.
Whereas if we divided up an IRA and I gave that to you and you took from the IRA, you would get dinged for not being 59.
Which is important consideration when you're starting to work on your new budget and those new goals. Like, do I need to take a little bit of extra money out now to get myself grounded and up my feet? That could be the opportunity to take it from that qualified account there.
And let's just say both of you sort of agree that really you're just going to make this equal. I mean, there's really some strategies there if you two are trying to be amicable.
Yep.
Where if you're just going to try to help the other person out because you know that they need to take some money out or they're trying to help you out, they can allocate part of their current 401k to you so that you're able to take that one-time withdrawal. And then you can just kind of pay them back by giving them the equal amount in the IRA, in one of your IRAs, so that it's a net zero.
Yeah.
If for example, you two have decided to keep your own retirement accounts, but you're still helping each other out in a way with this benefit that I would say is not well known.